Luckin is just one of dozens of Chinese frauds, many of which you've had a hand in exposing. I looked this morning and that according to the Bloomberg, there are some 400, Carson, Chinese domiciled companies listed on U.S. exchanges. Based on your experience, how many of those 400 companies do you figure would be frauds?
Well, I believe that a substantial number, more than let's call it a substantial majority, are committing at least some level of fraud. The reality is, and it's very hard to explain this to people who haven't been ensconced in China and especially the China stock listing world, but the reality is that in China, a company that invents 30% of its revenue is considered real. That's, because if you're taking other people's money in China, there's an expectation that there's some level of graft and fraud. So 30% fake is real in China. North of 50% is where they start to say, yeah, that's a fraud. 30 to 50% is kind of a gray zone. Faking profits without really faking a lot of revenue is the gold standard in China. So, but the thing is, if this were a U.S. company or U.S.-centric company listed in the U.S. that was inventing 30% of its revenue, we would not tolerate that. But that's China. That's the game.
At one point, and I know you're aware of this, Luckin's market cap exceeded $12 billion. What does that tell us, Carson, about the conventional wisdom that big Chinese companies are okay? It's the small ones that you need to worry about. They're the dodgy ones.
Well, I don't know why anybody would, say the big Chinese companies are okay. One of the thought exercises I'm fond of doing with people when we have little debates about China and Chinese companies is to talk about Alibaba. So before Alibaba went public, it had a subsidiary called Alipay. And Jack Ma literally just took Alipay without telling any of the outside shareholders or directors. And this was in 2011. Several months after he just took it by transferring legal ownership to himself, the other shareholders discovered it. And at that point, he went to the board and said, well, yeah, but actually I don't think it was legal for you guys to have a share of Alipay, so that's why I did it, which is a total lie. If that were the case, there would have obviously been discussions ahead of time. And so then at the end of after he took it, he said, well, this is how much I'll give you for it. Jack Ma is not an above-board operator. That was fact, and everybody wants to forget about that and pretend like Alibaba is a company that operates, that reports financials the same way that a U.S. company would, or that we'd like a U.S. company to. But that's just not the case.
Carson, President Trump said last week he's looking, quote unquote, very strongly at requiring Chinese companies listed on U.S. exchanges, to follow U.S. accounting rules. Do you believe he's willing to follow through on that and risk an exodus of Chinese companies from the NASDAQ and the New York Stock Exchange?
Well, predicting President Trump is, that's not a business I want to get into.
Okay, so let me add this to help you. Larry Kudlow, the NEC director, says no one can confidently invest in Chinese companies. And also at the same time, again, I'm sure you're aware of this, but Bloomberg just a couple of days ago reported that NASDAQ is tightening its IPO requirements for Chinese companies to the point where some may not be able to list as they previously have. If you take all of those things together, it sort of suggests that something's going on. Is there something going on?
So, yes, but maybe not the answer you were looking for. Okay, NASDAQ and NYSE, their interests are different because, the NASDAQ purported requirements, those to me are not substantive. That's a fig leaf. So I think that they're promulgating these requirements or quasi-standards in order to say, look, we got tough on these listings, but they're still here. I mean, do not forget how NASDAQ and NYSE make their money. They make their money on listing fees, which these companies pay listing fees, and they make their money on trading. And these companies, some of them, I mean, are quite actively traded. NASDAQ and NYSE still have offices in Beijing where they try to recruit companies to list in the U.S. They maintain those offices even after all of the delistings and the companies that went dark around 2012, 2013. I mean, there were literally hundreds of PRC-based issuers that went dark or were delisted from U.S. exchanges, yet they kept those offices open. They still pandered for business. So I don't think NASDAQ is really on the same side here. Now, in terms of what President Trump is thinking, I mean, he's also saying, but I don't want to lose those listings to London or Hong Kong. Now, I think we should be willing to lose those listings because while institutional capital is capable of following these, quote, companies to Hong Kong or London, American retail, I think, would be much less likely to follow. And so I think this would be preserving capital of U.S. retail investors.
Okay, so we're getting to the issue that you've raised for more than a couple of years already. You have accused Chinese companies, with the backing of the Chinese government, of using the U.S. capital market as a cash register and raising capital here and transferring that wealth back to China. Is that message actually getting through to the administration, or what we're hearing from President Trump and NEC Director Kudlow just more demagoguery?
Well, obviously, this has become a much more important issue to the administration as it has found itself in a political crisis over the coronavirus. So, but for the coronavirus, we wouldn't be seriously having this conversation. Credit to Senator Rubio, who's been on this for a few years and has been pushing for increased enforcement, effectively, of our regulations and laws against the China-based companies. But I really don't know. I mean, on the other hand, President Trump does like to see the indexes print at high levels, and arguably this could hurt the indexes a little bit. I haven't really sat down to do the math.
And I wonder about the blowback for Wall Street. Let's not forget that Goldman Sachs, JP Morgan, and Morgan Stanley very badly want full access to China's private wealth and securities industries. And if the United States were to make it more difficult, right, to raise capital in the U.S. capital market, it seems to me an easy way for China to retaliate is to exact revenge on Wall Street.
No, this will meet all of the lobbying. This will meet a wall of lobbying money if this proposal or any real substantive proposals that could lead to delisting or closing the door to PRC listings in the U.S. make advances. There will be tremendous pushback. But one of the dynamics, though, that I'm really interested in is when the dust settles and we all come out of our homes and we look around and we see the businesses lost, the lives lost. Will there be such a massive backlash against China from the grassroots to the policymaker level that the Wall Street banks will say, maybe we shouldn't be fighting this one? If this doesn't do it, nothing will. Nothing will make them say, because I do have a theory that maybe Goldman Sachs can accept a diminution of its China business if everybody else gets hit in the same way.
You're making the case,
but I just don't know.
And we have to wrap up quickly, Carson, that Wall Street, for the sake of ethics, is willing to sacrifice something on the bottom line. You truly believe that?
Well, for the sake of public appearance, maybe. If the backlash, if the vitriol toward China is so strong from grassroots to the very top, maybe that will curb Wall Street's appetite to do business in China. Maybe.